Hello and welcome to the week ahead video with me, David Madden. Now before we take a look at the major events of next week, let's just take a quick moment to recap the major events of the week just gone. Yesterday we saw a sharp move lower in global stock markets due to fears about higher levels of inflation. And why is this important? Well, on Wednesday next week we have the minutes from the most recent Federal Reserve meeting. Now traders will be listening out for any clues or any further details from the meeting at which the Federal Reserve hiked interest rates by 50 basis points to try and figure out what exactly was the logic behind the Federal Reserve's move and also what could we potentially see from further future monetary policy meetings. Also next week, on Thursday, we have the preliminary reading of US GDP. Now keep in mind, the advanced reading of GDP for the first quarter of this year came in at minus 1.4%. So people will be looking out for, is that number of negative 1.4, will it remain the same or will it be revised higher or lower? And this could increase volatility because some of the major themes of the past few days has been high levels of inflation, the prospect of further interest rate hikes from the Federal Reserve, the possibility of actually another 50 basis point interest rate hike next month. These are all the kind of common themes of the markets in the last few days. Looking at the price action here on the US30, we saw a sharp move lower yesterday. We saw a sell-off in stock markets around the world, but yesterday the US30 fell to its lowest level since February 2021, which really highlights how bearish the recent move has been. We have seen a bit of a rebound, but keep in mind the US30 is still holding below these three simple moving averages, and while it holds below these three simple moving averages, it's likely the short-term bearish trend will continue. Moving lower from here, we could look to retest the recent lows of 31,000, and a break below that could see a target 30,000 and 30,800. Looking at the price action in the past 12 to 16 hours, we have seen somewhat of a rebound. If you're looking at the MACD indicator, we can see there's a steady decrease in negative momentum, indicating that the bears are no longer as influential as they once were. The RSI is moving higher, suggesting the price bias is to the upside. So if we do see a continuation in the short-term upward move, we could encounter resistance at 32,225, and a break above that could target this zone here at 32,753. Looking at the US dollar crosses, the US dollar next week, depending on what's said in the Fed minutes and also depending on what goes on in relation to Thursday's preliminary reading of US GDP. Now looking at the pound dollar here, the broader trend, the much broader long-term trend is lower. After all, this time last week, GBPUSD fell to its lowest level in 23 months, but throughout the last few days we have seen a move to the upside, largely driven by a pullback seen in the US dollar. If you look here at the MACD indicator, we can see that momentum is in positive territory, indicating that the bulls are in control. The RSI is moving higher, suggesting the price bias is to the upside. While we continue to hold above these three simple moving averages, it's likely the medium-term upward trend will continue. A rally from here could see a target 1.2637, and a break above that could see a target 1.2771. It is worth noting though that a much longer term trend is to the downside. So if GBPUSD fails to break above this area here at 1.2637, that could be an early warning sign that the much broader bearish trend is still in effect. Any declines in pound dollar from here could find support from 1.2329, and a break below that could see a target 1.2216. So just to recap, looking ahead to next week, on Wednesday we have the minutes from the most recent Federal Reserve meeting, and on Thursday we have the preliminary reading of US GDP. That's all from me from this video. Thank you very much.